Morning, everyone. Morning, YouTube, morning, trade pros. Hope everyone's doing well, and welcome to Thursday's morning market update here. It's not so much the morning, but for you guys, it's the morning, getting ready for this market open together. So let's see what we had. We had a lot of news overnight. Just saw that this morning Liz Truss from the UK resigned, so that's pretty interesting. We saw a pretty large downside movement in the market. We also have earnings, right? Earnings to talk about. Tesla, one of the biggest companies in the world, right? One of the heaviest market caps reported earnings yesterday, kind of a snooze fest in terms of Tesla getting slapped down. So we're going to talk about that. We're also going to be talking about recessionary talks in the US from very large figures and big names. And we're also going to be talking about some of the Fed's apparent insider trading. So why don't we dive into it? We all know it's the earnings season. We had earnings yesterday on Tesla. Tesla usually surprisingly beats earnings, right? They always fish it out. And this time around, that didn't happen. The top line missed in Tesla, and Ascent shares down about 6.9% after hours yesterday. And this dinged investor confidence amidst a rout in the tech stock. So this can shape up a little better, I would say, than what Netflix had provided for us, because Netflix did pretty well. We had a nice pop in Netflix, but Tesla tested pretty poorly with big tech companies reporting earnings next week. So that's what I was talking about in our market analysis lives that we do on Sundays. At the beginning of the week, I'm expecting a little more of the upside, and probably by the end of the week, we'll probably see some of this get drawn down as we start to see those big tech earnings report. And I don't necessarily think that big tech next week is going to have the best of times, but we'll see. A lot can change realistically. Tesla last hit about 208 last year, 2021 in June, and that level is pretty much getting tested right now. It's a huge area that we do have to consider, and I'm watching for a pretty strong spill below that area as one of the potential day trades on the day. Right, they're down now about 50% since the beginning of the year, and production bottlenecks were cited as causes for the miss in sales, as well as logistical issues with deliveries and battery supply chain pressures. So here's a quote from Elon Musk. There weren't enough boats, there weren't enough trains, there weren't enough car carriers. Tesla got too big. So Elon Musk said on a conference call, I can't emphasize it enough. We have excellent demand for fourth quarter, and we expect to sell every car we can make as far as in the future as we can see. So to be frank, we're very pedal to the metal come rain or shine, and we're not reducing our production in any meaningful way, recession or not recession. So strong vehicle pricing still helping Tesla generate about $3.3 billion a quarter in profit, almost matching the company's record in Q1, though it expects to finish the year just shy of its 2022 target of boosting vehicle deliveries by 50% year over year. So in order to do so, the automaker would have to hand over 500,000 cars in the final 3 months of the year, which would be 45% more than its prior record quarterly deliveries. So Musk also floated the idea of stock buybacks around $5 to $10 billion in 2023, and sees potential path for Tesla, whose market cap is now under 700 billion, to be worth more than Apple and Saudi Aramco, which combined values, right, are over 5 trillion, right? Apple 2.3 trillion, and then Saudi Aramco 2.1 trillion. So Elon Musk thinks those two combined, 5 trillion, Tesla has the ability to have a higher market cap. So we'll see how that goes. Musk recently has been in the news naturally for the Twitter acquisition that we have to take a look at as well, the pending $44 billion for Twitter after recently changing course to follow through on the purchase agreement. I'm excited about the Twitter situation. He declared calling it an asset that has sort of languished for a long time, but has also incredible potential. So the long-term potential for Twitter is an order of magnitude greater than its current value, although obviously myself and other investors are obviously overpaying for it with Twitter right now. That's what Elon said. So we'll see how that goes through. Those shares are jumping around along with Tesla. Oh, geez, sorry, it's something in my eye. So to add to that, right, earnings period continues next week. We got the main thing that I'll be focusing on is Apple, because Apple has been shifting this market up and down very casually, if you will. But we also have big heads talking, right? Big public public figures, big CEOs, prior CEOs, former CEOs talking about the recessionary, cloudy storm weather in the economy that's headed for the US, right? Um, According to Bezos, Americans should brace themselves for a recession. Uh, he's also become the latest to warn about the doom and gloom on the horizon. And this is a quote: "Yep, the probabilities in this economy tell you to batten down the hatches," he wrote on Twitter in response to CNBC's interview with Goldman Sachs CEO DJ Solomon. And in a clip, David Solomon cautioned businesses to think more cautiously and to factor volatility into the economic outlooks. We also saw Goldman Sachs, was it Goldman Sachs? It was one of the banks, maybe Morgan Stanley, I don't know, JP Morgan, one of those. Even Goldman Sachs, right? The investment banking business year over year is down drastically, right? No one wants to IPO, no one wants to merge, no one wants to acquire anything realistically, as we see economic conditions continue to deteriorate. So many have recently warned about the U.S. Recession coming, like J.P. Morgan's Jamie Dimon, right, the CEO, who said that the storm cloud could arrive the next 6 to 9 months amidst very serious headwinds like inflation, rising interest rates, quantitative tightening, and the war in Ukraine. Naturally, all things that we know. But Jamie Dimon's been talking about this for a while, so I kind of agree with his tone more so than some of the others that we've seen. And the worst is yet to come. The IMF added last week saying that the U.S. economy will continue to stall. And even President Biden conceded that a recession is a possibility, but only expects it to be a very slight if it does occur. Now, even again, Bloomberg, within the next 12 months, said there's a 100% chance of a recession. This has been something that I think everyone's known for quite some time, but maybe didn't want to doom and gloom everyone over media about it. So many company executives are also likely to internalize Bezos' message, right? They don't want to publicly say it realistically, as he is someone who clearly has his finger on the pulse of many parts of the economy, naturally, with Amazon. So that's one thing to consider. The U.S. is already in technical recession following 2 straight quarters of negative GDP growth, real negative real GDP growth, which is by definition what a recession is. In Q1 negative 1.6% and in Q2 negative 0.6%. Any decision on a formal recession is left up to NBER's business cycling dating committee, which has been responsible for setting dates of peaks and troughs of the US economy since 1978. And the funny thing is that the committee generally waits a while after a recession has begun to officially pronounce it, and on occasion, even when it's already over. So I think we're already in one at this point. Realistically, a lot of people are worrying about one. It's a slow decline. We haven't seen too many catalysts just yet, but that is something that we do have to consider in the next 6 to 12 months, probably, right? We're probably going to see more turmoil and more shaking up coming into 2024 as it stands. And then the last thing I do want to talk about, let's see some of these questions I've seen. It's my favorite math topic. None. Why the hell would I do math? Yeah, the 368 range to 372 rate, whatever it is on the SPY, is getting pretty annoying. But ideally, we get some kind of a breakdown at 367, 368. I'll talk about some levels just after this, but they're huge areas. It's the positive block on a market maker positioning, right, to stall prices out. So you kind of let go of that area, you're going to get somewhat of a downturn in the market. But we'll talk about levels in just a bit. This is one little thing that I find a little fairly interesting. Investigative journalism, right? At a Wall Street Journal is reporting on how the federal officials working on the government response to the COVID-19 made some well-timed financial trades. Surprise, surprise. So we've seen that a few Feds stepped down at the beginning of the year. We've seen that a lot of Feds dropped positions just before we started tumbling. We've seen that even in March, right? Some of this was being done as well. So when the markets began tanking and then rallied really aggressively at the beginning of the pandemic. In fact, in March 2020, the most active month for trading by officials across the federal government, including the Department of Health and Human Services, while some officials even started trading in January 2020. So when the US public was largely unaware of the threat posed by the coronavirus, there was people behind the scenes taking advantage of this on a financial scale, which was the case with the Federal Reserve as well. So some examples, then Transportation Secretary Elaine Chao scooped up more than 600,000 in 2 stock funds while her agency was involved in pandemic response, while her husband, Republican Senator Mitch McConnell, led negotiations for market enhancing stimulus bills. So similarly, a deputy to top health official Anthony Fauci sold off thousands of dollars of stock funds after learning about the pandemic risk in January. Treasury Jeff Goatman Godman, I don't know, who also bought Boeing shares while being involved in administering the stimulus packages for plan makers and invested in GE General Electric before the company secured lucrative contracts to supply ventilators. So to be clear, realistically, it's very hard to convict lawmakers of insider trading as agency ethics officials rarely have full picture of what employees are working on and the information that they're privy to. But again, realistically, it seems very fishy that surprisingly, they're calling tops and bottoms regularly, no matter what kind of government official. Even the Federal Reserve has been known to uh, somehow have positioning in and around those key events. So just thought it was a little interesting. We'll see where this goes, probably nowhere, but just wanted to mention something like that. I want to go through a few things here, some market maker positioning, also some of the levels that we do have to watch out on the S&P 500 futures. But the market maker positioning is pretty negative into the end of the week, realistically. We have one blip of data between 372 and 367. That is a little positive node on the market maker positioning, meaning at that level, they're probably going to want to range it out. You start moving through that, right? You have this 370 massive block of resistance in around 373, 371, but also at 367, 68, you have this pretty strong support structure. So those areas need to let go to kind of open up a little more of the movement and let this kind of range dissipate and see a trend. Realistically, there's a lot more negative delta, so I'm leaning a little more to the short side here today. We'll see how that shapes up. And I don't want to get caught necessarily continuously shorting something that might pop aggressively. But when we take a look at the futures as well, some of the key levels that I want to give you guys here, 3700 to 3703. 3703 is a huge area that provided multiple support chances yesterday, finally broke. Right now we're trying to reject it as resistance. As I'm looking at this chart, it held fairly well throughout the overnight session as well. And as long as we can continue below that, and as long as we can actually see the move under 3680 by the end of the day, I think some of that downside opens up in tomorrow. However, some key levels that I want you guys to know. We have 3703 naturally within a 2-point range of that area. That's going to be huge. We also have a level above 3714 to 16. 3724, 25 is a very huge level as well. And then 3731 to 32. You move above that, what you're doing is you're starting to enter a low volume area and potentially into a distribution above. So keep that in mind. As long as we can stay below 3703, 3700 within 2 to 3 points of that area. As long as we can stay below that, there's going to be that potential to get into the legs to that downside. 3692, 3680, 3673, whatever the areas are, that potential opens up as long as we can stay under 3700, which is a key area that we have to keep in mind for today. With that being said, blabbed enough. I hope everyone enjoyed this, had a good morning, and is ready for Thursday. Let's see what Thursday brings. Take care, everyone. Come check us out at community.tradeproacademy.com for our free Discord room, and we'll see you guys tomorrow to wrap up Friday. So thank you all. Let's wrap up this week strong. Don't trade the range too aggressively, and we'll see you all tomorrow and next week. Take care. Bye-bye.